As real estate investors, we are always trying to make the best future possible. And that's why we invest in real estate in the first place. Over hundreds of years, real estate has proven itself to be a great investment. And by investing in real estate, we look to maximize our cash flow as well as our net worth. In order to do that successfully, we need to consistently buy good deals. But with a looming market crash, should we still be buying properties now? Or should we wait and hope to buy properties pennies on the dollar? This video aims to cover all of that, and by the end of it, I will give you my best advice for what you should do now. Hey guys, welcome to the Hoan Zone, where we help you multiply the assets you own. And the purpose of today's video is because I got a phone call from somebody asking about the market and whether they should wait or should they buy. And that reminded me of a story in which I told them about a guy named Fred, who back in 2016 owned 10 real estate properties. These were rental properties, and I think he was cash flowing about $5,000 a month from these 10 properties, which was fantastic because that was enough to pay all of his bills. The problem was that he had heard that the market was going to crash. If you guys can remember back in 2016, that's when everybody was saying that the market was going to crash because the market crashes every 8 to 10 years. And the last market crash that we had was 2008. So when you add 8 years to 2008, that's 2016. So Fred, he got a little spooked and he said, you know what? I'm going to sell my properties. And then when the market crashes, I'm going to buy up a whole bunch more, right? And so that was his plan. That was a solid plan. That would have been a great plan if the market had crashed. So in 2016, he sold all of his properties. And I think he said that he cleared $400,000 in cash after taxes and after all debts paid. So $400,000 went to his bank account. He had no more properties, no more passive income. So come 2017, guess what? No crash. 2018, no crash. 2019, no crash. You see where I'm going with this? And fast forward to today, 2023, still no crash. Yet, people today in 2023 are saying that, hey, Hoan, there's got to be a crash coming. There's a looming crash. What should I do? Should I wait? Should I buy? So let's talk about Fred again. So he's been waiting since 2016 for this crash. But mind you, he has no more income coming in. He has no more passive income. He's just sitting on a bunch of cash waiting for this market. And then what happens is he needs to spend money because he still has to live. So bit by bit, he's slowly spending the money. Fast forward, today he has no more money and now he has to drive for Uber. And there's nothing wrong with driving for Uber, but it's a very different lifestyle than what he used to have when he owned 10 rental properties, collecting the passive income where he was his own boss, able to do whatever it is that he wanted to do whenever he wanted. So before he was an independent real estate investor collecting enough passive income to live the way he wanted. And today, now he drives Uber, and it's probably not the most ideal time. And I bet he would rather be doing something different versus driving for Uber. So he bet on the market crashing because everybody else told him that the market was crashing. And here's the other thing. The people who told him that the market was going to crash, they suffer no penalty whatsoever, making that claim and it not happening. So be very careful with where you get your advice. So my piece of advice is don't listen to everybody, because the people who know, right? The people who know aren't saying, and the people who are saying don't know, right? So keep that one in your back pocket and use that anytime you hear somebody telling you that the market's going to crash. Do they have anything on the line? Is there a consequence if they predict wrong? And if there is no consequence for them to predict wrong, then they're just yapping their mouth. Who cares what they have to say? Everybody has an opinion, but not everybody has the consequence of having that opinion wrong. Fred had a consequence. His consequence is he got rid of all of his cash flowing properties. And if he would have held on to them from 2016 till today, they might have doubled or tripled in value. So how about that for a slap in the face? So when you bet wrong, you will pay the price. If you just hear somebody saying something, they're not going to pay any price. So be very careful with that. So let's get right into the meat and potatoes of it. Is the market going to crash? I have no idea. And I will be upfront and tell you that I have no idea. And as I said before, those who know don't say. And those who say don't know. So I'm going to not say anything because I don't know, right? I don't know. unless I do know and I'm not saying, right? Just kidding. I have no idea. I can't predict. And if I could predict, then I probably wouldn't be a YouTuber. I wouldn't be a YouTuber and real estate investor. I would already be sitting on $1 bazillion, right? So we don't know. Nobody actually knows what's going to happen. We don't know. So the next best thing is to bet based on whether a market goes up or a market goes down. Is there a way that you could win no matter if the market goes up or market goes down? That's your next best thing in lieu of actually knowing what's going to happen. Now, there is a lot of reasons why people think that the market is going to crash. The Fed raised the interest rate, so interest rates are super high. Then we have Russia attacking Ukraine, and then we have the BRICS emergence with China, Russia, Brazil, India, all getting together and creating this superpower that's going to challenge the America superpower. So we got that kind of things. We got energy crisis. We have inflation. There's a lot of things that could cause a market crash. And then there's also what is preventing the real estate market from crashing. And one of those things is supply. Currently, the supply for sale is pretty low. And because it's low, anything that pops onto the market, buyers are buying. Despite interest rates being super high, buyers are still gobbling up anything that pops on the market because they still need a place. And with inventory super low, they are willing to pay asking price or way over asking price. Talk to your real estate agent friends. Say, hey, how's it going? Are you representing any buyers? Are you guys struggling with trying to find a property? I bet you they will say yes, right? So because the supply is super low, the demand is going to be high. And if the demand is high, people are willing to pay more. And if people are willing to pay more, then prices are not coming down despite interest rate being high, despite their monthly payments being higher. Here's the thing that's going to happen. People are going to buy these prices with these really high interest rates, they're going to be willing to pay the prices with high interest rates with the idea that the interest rates are going to come back down in a few years and they're going to refinance then. So you'll see a lot of people coming in with cash and buying properties all cash just with the aims of refinancing later. And if you're not a person who can come in with all cash, again, you might stretch yourself thin to buy a property with the high interest with the hopes that in a couple of years that the interest rates are going to come back down and then you can refinance and then you won't have to stretch as far anymore. So supply being low creates that artificial high demand, which means prices will remain high. And unless there's a whole bunch of properties being built out of nowhere, then the supply is still going to be low. Think about where supply comes from. It comes from a person, a seller, willing to sell their house. But if that seller is afraid of the market, and when I say afraid, I mean if they sell their property, where are they going to go, right? They can't just sell their property and then have nowhere to go. They need to move to their next place. So if there isn't an immediate need to actually sell and move, like say job relocation or something like that, if it's just a want, most sellers are sitting put because they see that market is so super tough to buy in right now that they're not going to risk selling their house and going out into the market to buy a property. So they're going to sit put, and that means that you're not going to have a property to buy. The supply is going to continue to stay low. And I know we've been talking about the real estate market. There is something that I want to say to you guys. There is no such thing as a real estate market. There's probably 400 real estate markets in the country, and how one real estate market in the country reacts will be completely different than how another part of the country reacts. One might go down 50% while the other goes up 7%. And there's no rhyme or reason. Maybe there's higher supply. Maybe a company moves into a city and moves out of another city. So all of these markets act independently of one another. And because they do, you can't just blanket statement when the real estate market drops, because there is no such thing as the real estate market. There's many different markets and they all act in their own unique way, and you need to be a master of understanding how that particular market ebbs and flows so that you know what's going on and so you know how to act accordingly. I will say currently we are not in a market crash. Like the world right now is not feeling like 2008. The market did not crash, right? There might be things that seem like it crashed, but prices in terms of real estate have not crashed. So it's easy from this vantage point, when things are still good, to say that when the market crashes, that you will be in position to buy up as many properties as possible. I will help you remember something. Do you guys remember back in 2020 when the pandemic happened and the stock market took a dive, like a nosedive, complete nosedive, and everybody thought the world was going to end? Here's my question to you. Did you buy as many stocks as you possibly could? And if you didn't, why not? Right? Because that's the crash you were looking for. And if you didn't buy it, maybe it's because you weren't confident in the future outlook. So now let's take that same environment and now let's place it over the real estate market. Remember, there is no real estate market, but in this just conversation, let's say there is. When the real estate market crashes, will you have the same optimism as you have today to buy as many properties as you say you're going to buy? When a knife is falling, people are very scared to grab that knife, right? Because it can cut you. So when the market falls in real estate, will you have that same enthusiasm and confidence as you do today to buy all of the properties you say you're going to buy? 2020 was the perfect example. Why didn't you buy every stock possible? Because if you did, then you would have found that your money would have doubled or tripled or quadrupled or whatever, right? Same exact thing. You had the opportunity to do it then, but did you? And so it's a very important question because it causes you to look inside of yourself and explore, why did you or why didn't you act a certain way? What were you feeling? What emotions caused you to freeze or to move forward? That's how you want to take a look at the future when the market crashes. If the market crashes, the real estate market, will you have the resolve to actually take action? I don't know the answer to that question. Only you can answer that. So it already happened in 2020. What's going to be different when the real estate market crashes? Will you have the confidence to actually take action? Here's another thing I want you to consider. When a real estate market crashes, the reason it crashes is because people don't have money to pay their bills, right? And so when people don't have money to pay their bills, like their loans, in 2008, the reason that crashed, people didn't have money to pay their mortgages and they had too many mortgages. So they couldn't pay their mortgages, and then the real estate crashed and the whole economy crashed, and then people lost jobs and further had less money to pay bills. And so this is where we ran into the issue of this giant economy meltdown. When you are asking and praying for a market crash, what you're actually insinuating without you knowing it is that you're hoping and praying that your neighbor loses their job and are unable to pay their bills, which causes this catastrophe and prices to come down because they can't pay their bills. All the while you're hoping that you're keeping your job. So you're betting for them to lose their job and everybody else to lose their job and not you, so that you're in position to actually capitalize on a crashed economy. Again, the economy is only going to crash. The market's only going to crash because people don't have money. And why won't people have money? It's if they lose their job, their source of income. So you're praying that people are going to lose their income, yet you are going to keep yours to keep you in a good buying position to capitalize on that. So just be mindful of what you're actually hoping for, because it's not a great thing. The final point that I'm going to say about this whole entire thing is that in an actual market crash, credit tightens up. So that means that the position that you're in now, flush with cash or credit or the ability to buy, that may change in an actual market crash. So your optimism of buying as many properties may exist. So you did what I asked you and you explored your emotions and why you didn't capitalize on 2020 when the stock market crashed, right? And you're like, nope, this time it's going to be different. I'm going to be ready. So in 2023, when the market crashes, the real estate market, I'm going to be able to. So emotionally, you may be ready. Financially, you may not be, because again, credit tightens. Your hard money lenders may go out of business. Your banks may not lend to you. Your lines of credit may get frozen or completely taken away from you. And so do you actually have the money to buy all of these different properties that you're talking about? And the answer might be no, right? So you can ask for this market crash, even though you know that praying for a market crash means your neighbor is going to lose their job and going to suffer some hard times. And, you may have the optimism to buy. You might be mentally ready to buy. You just might not have the resources to buy. So this market crash is going to change a lot of different things. It's easy to say while we're not in a market crash that you would buy in a market crash. So just be mindful of those things. All right, guys, with all of that said, what advice do I have for you guys? Well, there's a couple of pieces of advice that I want to give to you guys so that you guys know what to do moving forward. The first piece of advice is pretty simple. Don't try to time the market. As much as we'd love to be able to say, oh, when the market crashes, that's when we're going to buy. And when the market's the highest, then you'd flip the property, right? I'd flip that, right? You think that you know when the bottom's going to be and you think you know when the top's going to be. You actually have no idea. You can only know the bottom and the top in hindsight after we've gone past the bottom and after we've gone past the top. You won't know during the moment if you're at the bottom or if you're at the top or somewhere in the middle. You just won't know. So stop trying to time the market. That's advice number one. Advice number two is try to argue the other side, right? If you're in your head, you have the argument of the market's going to crash, or you have the argument that the market isn't going to crash. Well, what's the other side of that? If you think it's going to crash, try to argue why it won't crash so that you can see what's possible, right? You don't want to be caught off guard. If you think it's going to crash and it doesn't crash, at least you are aware of what it looks like if a market doesn't crash and what you might do. So don't just bet all of your chips on black or red. Try to see what happens when you bet on black and try to see what happens when you bet on red. Now, that's a poor example because you know what happens. You either lose your chips or you double your chips. But in real estate, you're trying to look at this is what's going to cause the market to crash. And this is what's going to cause the market not to crash. And this is what it looks like if the market does crash. And this is what it looks like if it doesn't crash, right? And you want to look and explore all of those things and go out there and talk to as many people as you possibly can and say, hey, do you think the market's going to crash? If so, why? And then ask the other people who don't have that same argument. They don't think it's going to crash and ask them why and get both sides of the argument. Here's what's crazy. You'll be able to find both sides. And because you can find both sides, how do you know who's right? You see, right? How do you know who's right? If both sides have smart people saying the market will crash or the market won't crash, how do you know who to believe? So your best bet is to hear both sides and create a plan that can be successful regardless of what happens. My next piece of advice is to have as much private money available as possible. So what you're going to want to learn is how to raise private money from different people so that when lines of credit get pulled, when banks tighten, when hard money lenders go away, you still have access to this pool of private money. And the pool of private money could be people who have money in their checking account, in their life insurance policies, in their retirement accounts, whatever, right? People will still have money even in a market crash. In 2008, not everybody went bankrupt. Some people actually flourished in 2008, as crazy as that sounds. Some people shorted the market and became filthy rich. I know of a company that whatever they did in the market, and they said the market was going to crash, and they bet as the market was going to crash. And guess what? They got rewarded handsomely, and they went out and they bought 200 properties with the money that they made after the market did crash. Pretty crazy, right? So they bet correctly and they put the farm on it. Remember when I said if people don't have any consequences, do you want to listen to them? These people had a big consequence because if the market didn't crash and it went the other way, they would completely lose. They would have lost a lot of money. They were right and they made a lot of money, right? So what I want you to do is go out there and talk to a lot of people, become friendly with a lot of people, and tell everybody what you got going on. And have this pool of private money that is available for you if the market were to go down. Can you buy all of these properties for pennies on the dollar? Right? Because now you still have access to capital where a lot of people will not. A lot of your competition today will get wiped out. And because they're wiped out, there's nobody but you to buy up all of the properties. And while you're doing that, you can help a lot of people as well. Because some people are going to be going into bankruptcy or foreclosure. And you can stop both of those by buying their property. So find all the private money lenders as you can so that you are armed and ready when, or if I should say, if the market were to crash. All right, and my final piece of advice is to create great deals. I always like to tell my real estate students that good real estate investors try to find deals and great real estate investors create deals. Through creative financing and fantastic negotiation skills, you guys can create great deals that even if the market crashes and you lose, say, 20 or 30% of the value of the property, you're still well in the positive, so that it doesn't affect you. And if you are cash flowing from that property, it doesn't matter if your value is up 20% or down 50%. If you're still cash flowing, you can still afford it. And if you have creative financing in place and you are making payments to, say, the seller, hey, you're never going to get foreclosed on. Most likely you'll never get foreclosed on because you're making payments directly to the seller. The seller's not going to call the note. As long as you're paying them, everything is good. And so if you can create a really great deal through understanding how to structure deals, then I would say continue to buy. Like I said before, don't time the market. So if I'm telling you not to time the market, that means go out there today and continue to buy properties. What are you waiting for? You think that you're some kind of God that can predict when the market's going to crash and that the market will crash. And you think that when it does, you're going to be buying all these properties. I say I'm not that smart. So what do? I just create really great properties through creative financing and through great negotiations, like I said earlier, so that I buy properties that are really great deals that can survive whether the market goes up or down. And that way I can continue to grow my portfolio. And what if the market doesn't crash and the market actually goes up and continues to rise? Well, then I am lucky because I bought a whole bunch of properties. I didn't wait. And as we know, real estate typically goes up in value over time. Though I'm not investing for that, it's a nice perk to have. And while I buy, I am benefiting from the tax benefits that real estate offers. And that's really the name of the game. Make a bunch of money, but keep a bunch of money by playing the tax game better. And by owning real estate, that is an excellent way to play the tax game. As I mentioned, this whole video got prompted because I got a phone call from somebody asking if they should invest now or if they should wait. And ultimately, what I said to them, beyond all that I just said in this video, was that you got to learn more. You have to learn what to do in up markets and down markets. And you also have to prepare your team and all of your resources to strike regardless of what happens. And if you're looking to learn how to do that, then you can join me in my coaching program. I have a coaching program where I currently coach you guys twice a week. I don't know any other program that does twice a week every single week. So that's what I do with my students over Zoom, and we discuss whatever it is that they're dealing with, and we also go over what's going on in the market. So I provide this really close-knit community where you guys can learn how to invest in real estate, and the things that you're thinking of, that you're wondering, and all of that we can discuss in class. And beyond just the learning, what's really cool is if I or somebody else in the community wants to do a group project, the members in the training will be invited to be a part of that deal. So currently, I have a deal going on right now where like 7 or 8 of my students, I don't remember the number, but they are invested in the deal. And so once the deal is done, they all make money, and we are very close to the end, and the project went great. So if you guys are interested in being a part of deals like that, then being a part of the program will allow you to do that. Not only do you get to make money from participating in the deal, but you also get to learn every aspect of the deal, and you guys get to see a seasoned investor, myself, and you get to see how I analyze deals and how I walk every step of the way through the process. This way you can learn it without having too much at risk. If you guys are interested in working with me, you guys can go to hoanzone.com, and on there's an application that you can fill out to see if we are the right fit for you. We'll review the application, and if we think that we can work together well, then we will send out an invitation for you to join the program. And if you're more of the do-it-yourself kind of person, then I have a online course that is available 24/7, 365, where you can watch it and go apply it on your own pace. So whether you want to do it yourself or you need some help from me, I got you covered. And if you'd like to see everything else that I got going on, check out in the description below. There is a link for my links page. It's hoanzone.com/links, and that's going to give you the links for everything that I got going on. All right, guys, I hope you found this video very helpful. As always, I'm Hoan Tai. Let's multiply.